Hey, hi. Okay, as you know, last week, the week that's happened from Monday to Friday, all the big techs have already reported their Q4 earnings. So basically, on Friday, Amazon actually pushes the Nasdaq up a bit. The market has been, as I said, very volatile. Even with the big tech like the FANG stocks, behaving like penny stocks. You can see Nasdaq has gone down from as a high of like 16,000, touching 16,000, and now it has dropped to about 14,000. So it has gone to as low as 13,300. I believe on a microeconomic side of things, there are still the market may correct even more uh, before the COVID crash, right, in March 2020. The Nasdaq was actually hovering around 8,000. My personal opinion is, yeah, I know Nasdaq. There's been a lot of IT people embrace IT like Zoom and all that during the COVID and use more Netflix, during the COVID, or buy more Peloton um, exercise machines. You know, the growth for the many Nasdaq counters has actually gone up. Their growth could have been like people buy more laptops. So Apple gone up as well. May have gone up 60%. But with the 2022 Q1 guidelines, which every beginning of this year, when they give the Q4 results, they have to give the issue out the Q1 2022 guidelines as well. But some companies don't do that, and they are giving out a more weaker 2022 weaker guidelines. So so the growth may slow down to maybe a lower percentage. So there could be a growth of 60% and a reduction of 30%. So the growth can be actually around the area of 30% eventually lah. So if you want to price in that right now, right, as you know, market is always forward looking. 11,000 would be something that I'm looking at for Nasdaq. So if you really want to be buying the dip, right? So this 11,000, 12,000 each would be, I think, where Nasdaq would go down to, because now you're going through a bearish uh, uh, downward chart. So as you can see, during a bearish market behavior, the index can be like one day 3%, and down another day 3%. So which has been happening for the past few weeks. So this looks like a bearish trend coming up as well. I just want to talk a bit about Facebook. Okay, Facebook shares has really gone down a lot. It was at 323. It has dropped on Thursday's earning to 232. So it has gone down approximately 90 US dollars, 20 over percent, 26%. Is it a good buy? Personally, I think it's a yes. If you look at the Q4 results and their forward 2022 Q1 guidance, right? Yeah, they are posting a lower guidance, and a more conservative, saying that the growth will slow down. They also did mention things like they also incur a huge cost, about 10 billion, for the entire year of this 2021, for their investment in the metaverse. So, which is the reality labs doing Oculus and all that. So basically around 3 billion per quarter. So for me personally, I feel that this is actually a good investment. I know the institution are selling down the shares of Facebook because of seeing like Facebook is like becoming a startup all over again. And as you know, their yearly revenue yearly revenue for 2021, quarterly revenue is hovering around 27 billion to 30 billion per quarter. So if you less around 3 to 4 billion in losses for the investment in the reality lab, their profits would actually reduces to around 25 to 27 ish. So that actually maybe causes the market to this particular stock to go down a lot as well. As people think that reality labs, Oculus, metaverse, Horizon platforms, and all that may be something that is still quite a bit of a distance away. It won't monetize that early. So should we unfriend Facebook? Well, I think no. So I just want to talk about their share buybacks, which you see in Q3 2021, they do a 50 billion share buyback, and in the 2020 January 29 as well, they do a 10 billion buyback. So in actual fact, they're using their cash. As you can see, Facebook has around 40 billion of cash. The business actually makes a lot of, it has a very high profit margin, about 70 to 80%. Basically, it's a company that will not have I think will have they are inflationary proof in the sense that they don't have to buy petrol. They don't have to get affected by the rise in the commodity prices. Maybe some labor issues they may have, but they don't have labor forces like Amazon, which need a lot of workers, truck drivers and all that. So their profit margin, I think, will still maintain. It will just be their metaverse investment that will cause the additional losses, which they don't have in 2020 and 2021. So that's why the Q1 guidance and possibly Q2 guidance will be affected as well. But take note of the share buyback, because the share buyback actually enhances our shareholders' value. So that's actually very interesting. So another reason for the sell down is, of course, this 26% sell down is probably the first in the history for Facebook. And very rare FANG stocks actually suffered this kind of correction. Usually every quarter, if there is a weak guidance ahead and all that, or some bad news or changes in the fundamental, a stock will go down probably 5%, 4%, but not in 20% kind of scenario. So so as you can see, just want to show you, Warren Buffett talks about Facebook extraordinary business. Yeah, just a second. Yeah, so another thing, of course, they did mention is about TikTok. They did say that TikTok actually affected their short clips. As you know now, you got photos, which is Facebook, Snapchat, and all that. Then you got longer videos, which is like 1 minute and above, which is YouTube, which is focus. It's quite strong in that particular sector. Then you got the short clips video, which is the 10-second, 15-second video, which of course Facebook is saying that they have reels on Instagram, but it says that they are not getting the attention that's needed compared to TikTok. So I'm not sure how TikTok's rivalry with Facebook will continue, but as for this present moment, I think Facebook still has a majority control in the advertising segment, especially whether it is photo based or short clips based. Maybe not the long video based, which is in the realm of YouTube. The long video, YouTube actually in their Q4 quarters they got 60 billion, which is double of Facebook. Just for your info. So and of course Snapchat as well, other than TikTok, appealing to the younger generation. As you know, Facebook seems to not so appealing to the younger crowd. So as these are the future growth market, as and every institution would price in that future growth market as to what are the audiences right now and whether they will appeal to the younger audiences. And now it seems like Snapchat, which has gone up 20 over percent, 50 over percent on Friday actually, and I'll do a Snapchat video another day, and TikTok as well. So which Instagram last year wanted to do an Instagram for 12-year-old to 18-year-old, which actually had a backlash because of some issues on how they are not protecting the rights of the kids, so that plan has been delayed, but I think they will bring that back as well. As on the advertising segment, we have this Facebook page, and you have this Facebook advertising tools, which is very user friendly. I believe every small entrepreneur sure will have a profile, like a resume on their face on Facebook. And Facebook also is a place to find jobs. So it's good. It's like something similar to LinkedIn, and I think this Facebook page thingy, which you can create albums. If you're a restaurant, you can have menus and food. You can have a photo of your interior if you're a hotel. So instead of going to Google it, and you every information is scattered and very random, you can actually just go into someone's Facebook page and actually find out more about what they actually do and what food they actually serve and all that. So I believe this particular sector, Facebook, on their Facebook page thing, they are very, very strong, and they are still the market leader, even though Facebook user, in terms of networking with friends, that kind of scenario has probably reduces. So so the another thing is the price to earning growth ratio. Facebook now rank among the cheapest together with Google. The PAC ratio, if it's below 15, is actually considered very reasonable. I'll go through that later, and then in another video. So now they are at 14, so which is considered as good buy, very good buy. You should go and watch the Horizon video that Mark Zuckerberg did about how you can do yoga, where you wear your oculus. You can be in Czech Republic. You can have a tour you can have a scenery surrounded by a lake in Hokkaido. So I believe that this is something that's very interesting. So it will become, you can have your friends together, wear the oculus, have a meeting, or you can do a tour together. And they are coming out with this metaverse, virtual reality area, which I think would be even way better than Roblox. So this particular metaverse investment that incurs 10 billion a year, right? It's actually not fair for the shares to be dropped 20 over percent. If you look at Microsoft, they recently invested I think about 90 billion for Active Blizzard. It's a game platform company, game design company, and which does very famous games like Call of Duty and all that. So, but the shares went up, So it's actually an investment. You either acquire an existing company or you start afresh, and it shows that Facebook has this plan to be continuous. It's important for all these tech stocks to continuously to be innovative. So and I think another thing is, I think Facebook has got really good pricing powers. One ringgit per $1 per click. They can even do 110 per click. And people will still prescribe. In this inflationary environment, even though we go into a technical recession whereby 2 quarters of negative growth, I believe price will go down. People will become more competitive. Businesses will become more competitive. They will always constantly want presence, and then we don't do. People don't do advertising boards and leaflets distribution anymore. So Facebook is still the best way for majority of the people. The majority of small business owner. Yeah, the correction actually happens partly because of the slow in the growth, the slow in the user interaction. If you can see Facebook in their reports, they show that they had about 3 billion growth, 3 billion viewers per month, and and then for the quarter number 4, it was also show that it has not increased much. In fact, it has dropped like a couple 100,000 viewership, which I think it's more like a plateau. It's not really an inflection point downwards to show that Facebook is losing ground. I think is in any S curve, you will see a growth and then you will see a flat line a bit, then you will see a subsequent growth again. So I think it's healthy for a company to have a flat growth in certain quarters. You can't always be going up all the way. So this is something that I think and pricing power, and I think in this inflationary environment they will not be suffering how to say smaller profit margin because of increase in costs, which many companies are in their Q4 reporting that way, saying that their profit margin will be affected. So yeah, that's all I have to say. Facebook is good. Yeah. Now at 237, it's just like it's somewhere just a bit above the COVID price, and go for it. See you.